Joining us now from California is Dan McClory. He's Managing Director, Head of Equity Capital Markets and top China analyst at Boustead Securities. Hi there, Dan. Welcome.
Hello, Susan. Thanks for having me on the show.
Let's talk a little bit about the current investment climate here in the United States. Of course, President Trump has really shaken things up and changed the global landscape.
Yeah, he sure has. I mean, if anything, disruption as a strategy is being played out every single day. I do think, however, as it relates to investment and trade with China, you will see a more moderate approach ultimately being taken. Remember, Susan, there are 20 million people in China that make things that people buy in America. And that's something like 18% of China's exports go to the U.S., to places like Michigan and Ohio, where automobiles are built with Chinese parts and components, among many, many other products. So this nationalism and this isolationism and this anti-globalization, I think is just not going to play out. And this is, in fact, what Premier Lee has been talking about on the second day of the Congress.
Let's talk about the growth targets for the economy and sectors with the most growth potential, Dan.
Well, I think the sectors that have the most growth potential is where China has gone from being an imitator to an innovator. And those sectors, to me, are fintech, so financial technology, alternative payment systems, connecting people to lend and borrow, moving money through the system. This is a very, very large area of innovation for China, number one. Number two, alternative energy. You know, we heard again that one of the goals from the work report is a 3% reduction in noxious emissions, so making skies blue again. China has been at the forefront of all manner of alternative energy innovation. And the third would be in the area of services, and that's in hospitality and tourism. As China's emerging middle class continues to spend more and drive this consumer economy, China is innovating in areas of hospitality and travel, not just outside of China, but certainly within China.
Well, how are President Trump's plans going to affect China and the trade? I mean, he has said he wants to keep the jobs here.
Right. Well, as I mentioned before, there's such an interdependence between the two countries, number one. But number two, we're also seeing that some of the fundamental arguments are not actually playing out in fact. This talk of China being a currency manipulator just isn't true. I mean, the yuan was down 7% last year. It's up 1.5% already this year. So that's going to be very, very difficult to try to wage some type of a trade war around. A 45% across the board tariff, that's just not going to happen. Again, it would hurt the United States almost as much as it would China because of the interconnectedness of the global supply chain. So again, this disruptive nature of President Trump and how he prepares the ground for an eventual successful negotiation, I think is going to be far different than when they actually sit down and work things out.
The defense budget, Dan, is supposed to top, I believe, 1 trillion yuan for the first time. How significant is this?
Well, let's keep this in perspective, Susan. So the defense budget in the U.S. is $600 billion. In China, it's about $233 billion. That's an increase of 7% over last year. It was increasing as high as 10% back in 2015. So there's a little bit of a rationalization of the defense budget in China that's taking place right now. There's been a reduction of 300,000 soldiers from the PLA, from 3 million, which probably was an unusually high number. So I think you're going to see efficiencies coming into China's military. I think you're going to see spending in line with some of the growth targets, but also with some of those public sector debt limits that the Premier talked about, not wanting to exceed 3% of GDP.
Dan McClory, thank you so much.